Hello and welcome to this Forex News Preview video for Wednesday, April the 3rd. I'm Christina Bartanidu, Investment Analyst, and today we're going to look at the US non-farm payrolls report due on Friday at 12:30 GMT. So according to forecast, the US economy is expected to have added 180,000 new job positions last month, following a disappointing increase of 20,000 in February, which was the lowest growth recorded since early 2017. The unemployment rate is forecast to hold steady at the 19-month low of 3.8%, while regarding wages, average hourly earnings are also anticipated to hold flat at a decade high of 3.4% year-on-year, despite seeing slightly weaker at 0.3% on a monthly basis. So since inflation is what the Fed is looking at before setting interest rates, any upside surprise in the NFP numbers, and especially in the wage data, could raise hopes that the core personal consumption expenditure index, which deviated further below the Fed's 2% inflation target in January, may return back to the upside in coming months. However, with personal consumption and personal income data showing little strength recently, inflation may take longer to heat up, especially when companies, not only in the US but also abroad, feel uncertain about their future economic activities due to the ongoing trade war between the US and China. That makes imports from China more expensive to US producers. Brexit is another concern, as any delay to reach an agreement would harm confidence in Europe even further, potentially bringing some headwinds to the US economy as well. So, under an uncertain economic future and a potential deterioration in the US and global economic conditions, US companies may refrain from raising wages, and therefore household spending and inflation may remain restrained. Now, in terms of monetary policy, the Fed is not willing to continue its rate hike plans unless wage growth drives to higher inflation, saying instead that interest rates are projected to hold steady later this year and that data and economic developments will be important for any decision taking. The markets, however, are currently more pessimistic than the Fed is, giving a 65% chance for a rate cut by the end of the year. A downbeat NFP report on Friday could discourage markets even further and make a rate cut more favorable, as the US labor market would look less healthier in investors' eyes, shifting funds away from the dollar and towards safer assets such as the Japanese yen. In such a case, supported downside movements could come between 111 and 110.80, while if this area fails to hold, 110 could be the next level to watch. On the other hand, if the NFP numbers come better than expected, increasing hopes for higher inflation, dollar yen could continue recovery towards 112 and then up to 112.50. So that's all from me. Thank you for watching and have a great day.